Equity markets have been rallying over the last 2 months, and some people think that mid-June marks the bottom for this year. Other people, such as Michael Burry, think that this is just a huge bear market rally and that we've got new lows just around the corner. So in this video, we look at the drivers behind the rally, but also what might end it. Then we turn to my global winners portfolio, which has picked up on the theme so far, particularly energy, and is running with it. The portfolio looks across 5 different groups of funds to find the best performers, and it's a great way of keeping abreast of what's going on in markets. You can follow my portfolio on stockcar.io for free, and that's also sponsoring this video. So let's look at my global winners portfolio in a bit more detail. To see that turning point, I've compared 9 different exchange-traded funds here, chosen across a variety of asset types. And the vertical red dashed lines you can see are the Federal Reserve's meeting dates when they announced their policy. For example, in January, they announced that there'd be no rate hike. Then in March, they announced a 0.25% increase above their zero lower bound. In May, they ratcheted up the rate of increase to 0.5%. But what's interesting is that the turnaround in risky assets happened in their June meeting when they announced their first 0.75% increase. Now, just before that meeting, notice how the price of oil, which indirectly you can measure here with USO, started to fall. Also, the peak price of gasoline in the US peaked roughly at the same time. So maybe the feeling was that this is the turning point for inflation when the Fed got really aggressive, but also when gasoline prices started to fall. But if you look at the risky assets, which had fallen so much at that point in the year, and here I'm thinking about things like Bitcoin, but also the NASDAQ, so QQQ tracks the NASDAQ, emerging market bonds, listed real estate, or even high yield credit, all of those assets turned around at roughly the same point in mid-June, and they've been rallying ever since. Now, some people have been saying there's never been such a big bear market rally, so this is probably the turning point. However, Michael Burry, who made this tweet recently, points out that there have been more than 50% rallies several times in the past. And after these rallies, markets went on to find new lows. So for example, it happened in 1930, 1938, 1946, and since 1950 it happened again in 1968. So these precedents tell us that you can have these huge rallies and yet markets simply turn around and fall again. So what could turn this rally around? This is an article that was published in the FT by Katie Martin, where she talks about the importance of the credit market and how defaults might start to pick up and eventually put paid to the rally. And she showed some data from Fitch, the rating agency, which is showing that its forecasts expect a big pickup in defaults over the course of 2022, but also through to 2023. So for example, a lot of the names in the S&P 500 are low quality credits. So if there was a problem with rolling over their debt and defaults start to pick up, that would probably weigh on the equity market as well. Another reason people give for optimism is that they think the Fed will have to pivot its policy. In other words, instead of raising interest rates, it'll have to turn around and start cutting them again. However, as Katie Martin jokes, if you think the Fed is going to take its foot off the gas with headline inflation at 8.5%, I have a bridge to sell you. Now, if we are going to get a US recession, then we would expect defaults to pick up. We'd also expect to be compensated for that risk. And so when we look at the credit spreads, which is that compensation for taking US credit risk, then you'd expect it to increase. And yet what we've been seeing during the equity rally is the opposite. Credit spreads have been tightening. So you're really not being paid for taking US credit risk. And if we look at Europe, the situation's very similar. There was a turnaround in credit spreads at roughly the same time as everything else. So personally, I agree with Michael Burry, which is that I think there will be a weakening of markets towards the end of this year if this credit story really does pan out. Now let's turn to the global winners portfolio and look at the funds it can choose from. The funds are treated separately in 5 different groups, so we have 44 countries, 18 different factors and styles of investing, all based in the US, 11 sectors or industries to choose from, 8 different commodity funds, and then finally 9 different types of fixed income funds, and these are bonds. The strategy chooses amongst these funds using momentum. So it looks back over the previous 180 trading days to see which of the funds in each group perform the best. Then one fund will make it through into the portfolio. If none of the funds had a positive return over that period, they just don't make it into the portfolio at all. If we look at the historical performance of the strategy in terms of return and risk, you can see that since 2004, the strategy, which is shown in red, has beaten the S&P, which is shown in blue. And if we look at the biggest peak to trough fall since the previous all-time high, you can see that the global winners portfolio did a little bit better than the S&P in 2008. So it fell by about 30% and the S&P fell by over 50%. In the recent sell-off in 2022, it's fallen by less than the S&P, although it's been caught out by the recent reversal in momentum. So how did the portfolio do over the last month? Well, energy's done pretty well. So the Energy Select Spider Fund, which was our sector choice, has beaten the S&P 500 by about 3%. The UAE choice, which is also exposed to energy, it's the United Arab Emirates equity market, that underperforms slightly. And the DB Energy Fund underperformed by about 7%. And if we look within each of the 5 different categories, you can see which funds performed best. Argentina was the best choice. That rose by almost 30% over the last month. The IPO ETF was the best investment style or theme. That's because growth has done particularly well over the month, and it does have a big growth tilt. In the sectors, consumer discretionary was the best. Amongst commodities, Joe, the coffee fund, was the best performer. And then finally in fixed income or bonds, EMB, which is hard currency emerging market debt, was the best performer. Now, one of the worries about 2022 is that the earnings season is going to be particularly poor in Q3. So if you want to track what stocks are doing and what they're reporting in terms of earnings, you can do that on StockCard. Just go to earnings calendar up here in the tools bar, and then on a day-by-day basis, you can see what each company is reporting. So for example, Walmart had a particularly brutal Q1 earnings report. That was in May. So its Q2 report, which is going to be on August the 16th, may be particularly interesting. So if we drill into Walmart and we look at the one-year returns, you can see that huge fall in May as a result of that very poor earnings report. And just as you can follow my portfolio, you can follow whatever happens with Walmart, and you can set alerts so you'll know when anything important changes. You can also see whether other Stockcardians hold it and also what kind of investment style it belongs to. So for example, here it's in 8 collections, it's US based, it's consumer defensive, and so on. And if you've got the VIP subscription to Stockcard, you can see which investment strategy Walmart is good for. And if you do want to try out the VIP subscription as a viewer of PensionCraft, just use the promo code PensionCraft with no spaces and you'll get 10% off your first subscription. You'll also find a link to that offer in the description of this video. So what are the strategies choices for this month? Let's start with countries. And amongst the country ETFs, you can see that Qatar is above Saudi Arabia, which was our choice for last month. If we look at the time series for all of the funds, such that we see the best 3 and the worst 3 performers, you can see how Qatar has edged ahead of the competition. Amongst factor funds, there were no positive returns over the 180-day look-back period. The closest was the high dividend yield ETF, which was just slightly negative. It fell by 1% over that look-back period. If we look at the returns, you can actually see that it almost made it, but not quite. So there'll be no factor fund included for this month. Turning to sectors, energy is again the undisputed leader amongst US sectors. Its return is almost 36%, which is way above the next best performing sector, which is utilities. And in fact, it's been re-accelerating relative to other sectors recently. If we turn to commodities, again, here it's a story about energy. So the energy fund is by far the best performer over the last 180 days. And the next best performing fund, which is KRBN, the carbon fund, is way behind. So again, that will be our choice for this month, as it was last month. And then finally, if we look at bonds, like the factor funds, there are no funds with positive returns. The fund which fell least was SHY, the very short duration US Treasury fund, which only fell by about 4%. But if we look at how well each of them has done over time, you can see that none of them are anywhere near being included in the strategy. So for this month, no bond fund will be included again. In summary then, our country choice is Qatar, or QAT. That's our single change for this month. And then amongst sectors, again we choose XLE, and amongst commodities, again we choose DBE. And for another month, there's no choice amongst factors or bonds because the returns were all negative for those funds. So I agree with Michael Burry that we will see a turnaround in markets and they will head further down later this year. And I think the trigger will likely be the corporate bond market if defaults start to pick up. But also the key thing to watch is Q3 earnings. Remember, you can monitor that on StockCard. And if you do want to get VIP membership, don't forget our offer. Just use PensionCraft, the name of our channel, as the promo code, and you'll get 10% off your VIP subscription. And as always, thank you for listening.